We're back. Our call today. Salesforce, top pick, Bank of America. They reiterate the buy rating. They say it believes a long runway still exists for 17% organic revenue growth. It's already been a nice winner. And Tiffany, you own it, so you have to be happy.
Yeah, absolutely. I think Salesforce is one of these names that I think absolutely does have staying power, regardless of what this new world looks like. Whenever we get into it, we've got Jamie Dimon coming out and saying, yesterday, in his annual shareholder letter that JP Morgan is going to be in this kind of like hybrid model in terms of work, employees that are going to be working solely at home and coming into the office and everything in between. And I think that is the case for work right now. And I think a company like Salesforce, in particular Salesforce, since they are a market leader, really is positioned well to take advantage of this. Of course, it's helping employers and employees manage their pipeline. And I think it's going to be really important, especially doing it in a hybrid model.
Steve Weiss, you prefer Microsoft over Salesforce. You want to tell our viewers why?
Yeah, frankly, I don't think you can compare them. Just to give you some numbers, pre-tax margins for Salesforce is 17%, 40% for Microsoft. EBITDA margins, 22% for Salesforce, 49%. And I can go on and on. The valuation isn't comparable. And you've got Salesforce.com, which we've seen, has to make more and more acquisitions to keep their growth going. And so that's more like a roll-up at this point. Plus, we don't know if Benioff is sticking around or stepping down. More likely the latter. Look, Salesforce is a great company. But in terms of the valuation, I just don't see it when I've got Microsoft that's got a much better business. It's got a much better renewal business. That's the one I'd rather own.
Unless you say, OK, I look at the fact that Salesforce is down 20% from its high and Microsoft is hitting another new high today. And you say, OK, well, let's say the professor's right. And we're in the third inning of a boom. And the market's going to continue to go up for a minimum of the remainder of this year. Isn't Salesforce going to be part of that run and get back towards its new high, if not set a new one?
Sure. You don't have to own just one. But if I had to own just one, to me, it's not even a tie. I mean, Microsoft is clearly the one. Even though Salesforce has come down a lot and has recovered somewhat, it's still much more expensive. So why not own Microsoft? Microsoft had the Salesforce valuation. The stock would double from here.
Josh Brown, you think CrowdStrike is the stock to pick out of this conversation?
Yeah. So to echo Steve's point, like Salesforce is not exactly cheap, and I already own like one of the most expensive stocks in this sector. I can't own two. I can't own five of them. So that's where I am in software. I think CrowdStrike is the most exciting idea that I'm involved in, but the valuation's nosebleeds. I don't want to compound that by also owning Salesforce, which, 10 times sales. I don't know. It's a great company. We're customers. We use their wealth management cloud, their financial services cloud. We were one of the first firms in our industry to migrate onto it. I'll never leave. I can't leave. It's too expensive to move my data. So Salesforce has a client for life in us and millions of other companies. So I think it's an amazing business, but I'm invested in elsewhere in other ideas.